Jeremy is the head of wealth management at IP Global. For those that know me, my name is Jeffrey Asselstein. I'm the managing director of NelsonPark Property. This is the second webinar we're doing now in a series of webinars looking to really bring opportunities to people and some education about investing outside the region, particularly in Europe, but then we'll be looking further afield. So Jeremy, let me hand this over to you now, and you should have control.
Absolutely. Thanks very much, Jeffrey. And let me know when you can see it and I'll expand to full screen.
Yes, I can see your screen. Yeah.
Perfect. All right. Well, apologies, first of all, for everyone for being a couple of minutes late. This is very much a first world problem, isn't it? Everything, new things we're learning with lockdown and webinars and so forth. And so technology getting in the way slightly. But no, thanks very much, everyone, for joining and being part of it. So as Jeffrey said, we've been having a chat recently about different property markets and you know, general interests, and actually it's come across a lot, I think, with some of the people speaking to him about visa opportunities also being of interest, not just with property. So today we wanted to speak about particularly the Portuguese market, which is, as us and myself coming from a property investment standpoint, being a very attractive market for investing and making money over a long time, but it also happens to be on the golden visa side. So, you know, by proxy, I've become, you know, somewhat of a kind of semi-expert on this. And so today is an opportunity really to kind of go through the basics, go through what it means to buy in Portugal, what the pitfalls are potentially, what the advantages are, and then what the citizenship side can be as well. So for those people wanting to do either one or the other, a bit of both, what projects, what kind of property might make sense for you over that long term. So as I think Jeffrey said, there will be an opportunity if you want to write your questions into the box you should see on the side there. So by all means, please do write those in as and when we go, and towards the end we'll be able to try and answer some of those, anything specific you might have there. So to give a kind of framework though, how my company are coming towards this, and you know, hence why we're working with NelsonPark closely on this. IP Global, we are a property investment company. You know, been active for 15 years now and transacted circa just over $3 billion US dollars in about 30 cities worldwide. So we're hugely experienced. You know, we've been doing this in lots of different types of markets and lots of different cities. But particularly now we're focused back into Europe, which we basically, because we believe it's the safest place long term, you know, offers good predictable capital growth. It's eliminating a lot of the risks you might associate with some property markets. And so yeah, UK, Germany and Portugal are our three key places we're looking into. And so again, track record, I just mentioned this in terms of how much we sold, but it is important to know track record, you know, the amount of completions you've had, the amount of clients you've held their hand and walked through the whole process is important for you know, when there are a lot of people out in the property world here. We differ slightly because we are an investment company rather than agency. 99% of what you see out there is an agency who will be able to help and sell and advise, but then probably don't do a lot of the end service after that. So IP Global are a research-based firm. We have our own equity, our phones behind us. So we're not going to developers and selling for them and taking commissions. We go and buy projects from developers, which allows us basically to get in early, to get good pricing, and to be able to negotiate well. So we can then make margins and still sell to our clients at below WACC developer pricing. But with that, we're a kind of expat focused company. We can provide the full end-to-end support. So, you know, we've got the most important thing, which is knowledge and research on the front end to bring good projects there. And we've gone and put our own risk and money up behind these schemes, which gives clients confidence. But we can do everything throughout the whole process. We've got panels of lawyers, we've got mortgage brokers who can organise finance with banks based in the country you're buying into. And then we've got letting agencies on the ground there. So they can find tenants, manage the properties for you for the entire duration you own it. And then, you know, in 5, 10, 15, 20 years, whenever you want to sell it, we can help do that as well. So it's really just allowing you to invest unemotionally and not have to go and visit these markets, just understand where is a good place to buy, and we can help do everything throughout that process. So yeah, today Portugal, why we're looking here. The market we've actually started to go into about 3 years ago. It's not because of the Golden Visa scheme, but that happens to be something we know a lot of people are interested in as well. Being a kind of a safe market to buy into property. but also getting the added advantage. So what I want to cover here a little bit is a bit about why Portugal investment cases and where we're buying, and then we'll go a bit about onto the visa side of things. So it's one of the oldest, historically countries in Europe. It's about 10.5 million population. General high life expectancy, and Portuguese is the language spoken, which is the 5th most spoken language in the world. But most people do speak English, so it's quite a kind of easy market to transact in for the kind of global audience. Obviously, climate-wise, lifestyle-wise, it's probably one of the more attractive markets we've ever kind of bought into. The cities are very pretty, very glamorous in some sense, and the weather is nice mostly all year round. So it does attract both the lifestyle and the investment crowds going into it. So, but most importantly, it's stable macroeconomics, and that's what we're looking for when we're going to try and make money out of property, is to be able to predict what's going to happen over the next 10 years fairly comfortably, and know why there's sensible reasons why the economy and the property markets will thrive. So this is what we're going to have a look at. To kind of give some historical context, then Portugal is a market which, in the world financial crisis a few years ago, it was one of those which was in trouble, and it did need a kind of 80 billion bailout from the IMF, International Monetary Fund. But actually, what it's done, which most of the other countries which had bailouts at that time didn't do, was most countries had fairly harsh austerity measures imposed on them. You had to kind of up taxes, cut spending. And Portugal rather did the reverse. It had an aggressive fiscal policy of spending its way out, and it's worked dramatically well for it. So it's had a very conscious decision to, particularly for its major cities, Lisbon and Porto, to change the fundamental economy. So you're not just concentrating on manufacturing and tourism, you're changing it to a service-led modern city, which is going to attract proper companies, proper jobs, and that will support the economies going on. So it has worked extraordinarily well. Unemployment from that time to the beginning of 2020 has kind of dropped dramatically from around 17–18% down to about 6%, which is a huge success story. But yeah, collectively, Lisbon and Porto, they account for about 75% of the entire GDP of the country. And it's important that we're only interested in these two metropolitan areas. Loads of people who buy, particularly probably buy for the visa side of things, will go and buy down the Algarve, near the coast, near the beach, near golf courses and so forth, and that's fine. But investment-wise, that's probably the last thing you want to do, because it's not based on where the economy is, where the jobs are, and where the serious movement of people are. So what we're looking for is value opportunities in those two major metropolitan areas where most of the population of the country is and where all the major decent jobs are. So supply and demand imbalance, we're looking for those pockets, we're looking for where there's not enough property being built for a rising population, and in areas where we're going to see public and private money being spent for regeneration there. So something we can comfortably predict then why there's going to be growth over that length of time. And we can see here at the some of the stats we've got here. The top list here, rankings, that's PwC, PricewaterhouseCoopers, kind of 2019's overall prospects of global cities or European cities about where's the best for investment. And Lisbon basically is coming on top in terms of value and prospects and what's going in there for its economy and foreign direct investment. And then the bottom stats there, looking at just basic price comparisons to other major European capitals and just kind of getting some perspective then of where Lisbon sits. It is attractive for companies to go to, but property-wise, headline, 8,000 euros a square meter for prime areas compared to Madrid, Berlin, Paris, and London. It still really represents very good value in the long term, and that also obviously equates then to rental space for companies to set up. So it's more attractive for people to set up business there. Obviously, we have to talk about the elephant in the room, COVID. And of course, there's no denying every kind of industry, every kind of part of the economy is going to be affected by COVID globally right now. But what we can see in Portugal is less effects, less impact, a quicker reaction, and just a very good result, basically. I mean, obviously, that's a strange thing to say, and no good results at all throughout this. But comparing on an economy scale, how Portugal quickly reacted to the outbreak, it went into full lockdown 2 days after the first death. It had one of the slowest uptakes of cases throughout in all of Europe, and reacted very quickly, and actually quickly put the government stimulus in place as well to be able to protect jobs, to protect people, and closing down basically. So it's be able to keep its numbers very low, and in particularly compared to its neighbouring Spain. So and it's not just luck. Since the financial crisis, the government has had a big plan. It's been trying to put more money back into its healthcare services. It's been propelling jobs there. It's been investing into it, and it's trying to follow some of the UK's NHS model in a way. So there's a lot of money and economic power basically within that. So, but actually, when that was there, it was really useful in preparation for this pandemic and outbreak. So they never hit capacity for bed space, and they proved successful. So economically, this allows us to have a quicker bounce back for when we, hopefully for 2021 and beyond, and that's generally the expectations. So to quickly look at Lisbon and Porto as the separate cities then. Lisbon is the capital. It's the political heart. It's a business and economic hub overall. It's a city of just under 4 million people in the grander metropolitan area, and it accounts for about a third entirely of the GDP of the whole country. Now, because of all the preparation and so forth, what we can see here is expectation of GDP falling this year of circa around about 8%. And that, that normally would be a very big drop, but what we're comparing here is to other global cities, other economies, and so we've got Barcelona is predicted to drop 10% this year. Paris maybe 12-13%. So actually, its economic impact is lessened, and it's absolutely inevitable. We have 3 months of pretty much stagnant economy and nothing happening. You will see GDP recession in a year like that. But with everything being set up to be able to recovery quickly, this means the expectations you can see here at the bottom right for 2021 and 2022, really sharp bounce back. So by 2022, we're already going above pre-crisis levels, and that's the most comforting thing possible when we're looking about where to put our capital for the long term. Other things in terms of the growing economy, both Porto as well. There's been a big drive to have startups and give kind of incentives from the government to have startups and tech companies particularly. They want it to be modern service-led global cities basically, and it's been working very well. And then Porto, very similar kind of story, slightly smaller in terms of the population-wise and economy, but still accounts for just under a third of the entire GDP of the country. Its GDP growth has been one of the fastest as a city in all of Europe, and this is largely because it's very recently become an international player. Even September last year, it opened to direct flights both to the Middle East and to Asia and China as well. So that we've seen in Manchester 8 years ago. That kind of thing will very quickly open the floodgates to foreign direct investment, and it's been happening a lot. Forbes have called Porto the kind of #1 investable city of 2020 globally. So there's a lot going on there, a lot of interest. It's a big university city, which is always very good for investment numbers, people retaining their talent. But similarly, it's all underpinned by the supply and demand imbalance. Not enough property for a growing population, which increasingly has wealth, and the supply has been almost non-existent for the last 10 years. Under 1,500 homes a year for a population like this being delivered is compounding the problem increasingly every year. So which is, for us as in property investors, is great. It means there's a lot of upward pressure on competition for rents and for prices. So prices should grow very well over the next 5-10 years. The other reasons why any market you ever look at, what makes interest for investment is the currency. Most of the people I think on this call today are probably based in the Gulf region, so most are probably pegged to the US dollar, which means that if you're buying back into Europe with the euro or the pound, it's a very cheap time. So we look at 10-year averages here. We've got 10 to 15% down on what we'd expect it to be long term. So people expect to make money on their currency, let alone the investment they're buying into. When they exit in years to come. So it really should be bear in mind that is something that will give you benefit. And then the other thing, not everyone, when they want to buy property, is going to take a mortgage, and particularly if you're going to get into the visa category, you have to put a larger lump sum in, so you might not take a mortgage. But for pure investors, most of the time you want to take a mortgage and leverage that investment. So the interest rates in Portugal we see at the bottom here are some of the cheapest, globally for a developed market. So from 1.4 up to 2.2%, we can get those locked for 10 years. Those rates over a full 30-year term. So it's incredibly cheap time historically to buy into this market. So next to free money basically, and a cheap currency buying in somewhere, which is a upwardly mobile market. And we can see then, obviously compared to other regional markets, Qatar and UAE being much higher, and then other European markets as well. It's Portugal is still one of the cheapest we can find, so that's super attractive. So Golden Visa program, how does it work? I think it's probably useful to give an opinion from me, I suppose, on the Golden Visa program, because we're a property company, not a visa company, and most visa companies who are arranging these kind of things are very much selling their visa program. So objectively, at least, I can give a view, I think, on how they compare. There are a number of different schemes across Europe and the world. We have Belarus and Malta and Greece and Turkey and some of the Caribbean islands, all offering some kind of program, and some of them are slightly cheaper than the Portuguese one. But what I have objectively found is that most opportunities you'll see for a residency or citizenship scheme are probably quite terrible value, actually. Either a sunken cost where you have to give money to a government basically, and they're going to give you that visa for getting them $200,000 or so, or you have an investment which is packaged in a way which you're probably overpaying for the asset which you're buying. So actually, you have to be quite careful what you get into here. But in terms of an upwardly mobile market, Portugal probably represents the best of them. And it started in 2012, and this is at a time where Portugal was still on its recovery pattern. And we can, the list of countries I mentioned there they by their definition, governments and countries which are trying to give you citizenship for some kind of investment are the economies which need your money more than others, basically. So they tend to be weaker economies, so hence probably worse property markets as well. So. But Portugal is the one that really bucks the trend there. You can go and buy in Greece and nice cheap property, 250,000 in Athens, but you probably get a 1% yield on it because no one wants to rent there at the moment. But Portugal is in Lisbon and Porto are really upwardly mobile, and you can find your 5-6% yields and always have a tenant and someone who's got a good job and who will pay on time, and that's the kind of thing which is really important. So yeah, in terms of the visa program, it's been running since 2012. It's so far had about almost 8,500 applicants for it, with family members added on. That's about 14,000 people in total, and that's added about 5 billion euros to the Portuguese economy, which is the point to start off. It very much helps the kind of country's economy and the city economies as well from these regions. There's different ways to buy into the scheme, which I'll go a bit more on, but it's important to note, I suppose, for the program which lasts for 5 years. You put your money in, buy a property or invest in some way. You have access to Europe and residency for 5 years, and after 5 years, you either turn that into a passport, taking signing the documents off and taking a simple language test. You can do either permanent residency or citizenship. You can either take your passport or just take a long-term permanent residency, because there are some passport and countries out there in the world which will not allow you to have dual nationality. So this is something they're very flexible with, which lots of the other countries which offer citizenship aren't. So you can choose which one you want to go for. So the different routes of buying and how much it costs then into Portugal. It started in 2012 at 500,000 euros, which is pretty standard. There's a lot of different markets which offer that kind of rate. And that was for buying a property, or you can see at the top there, or you can put 1 million full into the market, or create a business which employs up to 10 people. Probably 95% of all the visas that have ever been done are directly through property. It's a lot easier and it's probably cheaper. So it started at this 500,000 level, which is probably the most straightforward transactional way of getting in there, buy property at or above 500,000, pay the fees involved in it, and it's yours within probably about 2 or 3 months. The other side of it, which is probably the more popular side, is the cheaper version, which is 350, and this is for properties which are either 30 years old or in special designated regeneration zones. So those ones, I think you probably have to kind of have a little bit more of a critical eye on, because they're the ones that tend to get packaged up. And I've seen in the past some properties which are probably overvalued really, but a lot of people getting the visa, they don't really mind, because they the visa is their priority rather than investment. So if it's, I would say, take advice, ask me further about these things, if you want to look into certain examples. But if you're going for the less than 500,000 level, just be a slightly more discerning investor. What documentation do you need then? Quite simple. Passports, evidence of health insurance, the authorization from the consultation. They want to check if you've got a criminal record, where your money's coming from as well. General kind of checks that you might do if you were just buying a property as well, actually. So yeah, these are all fairly straightforward. We can help with this if you've got any more specific question on those. And also I can share the slides with you afterwards if you want this full information. Now, the actual opportunities we have then, something to make it a bit more real then, so you can kind of look at what that kind of monetary value might buy you in these markets. We've got 3 schemes to talk about today. The first is in Lisbon, which is a property I absolutely love. It's actually completing in the next month, actually, which is attractive for a lot of buyers who want to get rental income straight away. We bought into this scheme because we like it as a property market, not because it's visa, but some of them, the ones over 500,000, do qualify for it. So there's a couple of 2-beds there, which are about 540, 550, which will cover. They're very large. It's a new build property in one of the most historic areas of Grassa in market. And so yeah, I'd say it's ready in the next month, and we can help with every part of the process for it and find tenants for it. And you see at the bottom there, the company has a rental guarantee of 5.5% for the first 2 years, basically. So there's security of income over that period of time. So if we don't rent it out in the first couple of months, no matter, us as a company will back up that rent and make sure you get paid for 24 months, no matter what. In terms of the investment case for this property itself, again, we can see the cheap interest rates. We can get 65 to 70% loan to value if you want to buy it as an investment without taking the visa. It's important to note, if you want the visa, you can't take a mortgage with it. You have to have either that 350 or 500,000 amount of money in the country. So you could borrow any more than those amounts, but that's what the government require you to put in. So there's 2 different ways of it. If you're purely doing investment, absolutely leverage it, take 70% loan to value, and then we can see here the kind of returns we'd expect then over 10 years. 154% return on equity, which is making 10.6% per year, and that's equated onto the rental expectations for income and the capital growth over that period of time. So excellent property, very attractive area. It's on the largest hill in Portugal. The property's got views back over the river and the cathedral there. Large apartments, glass fronted and so forth, so both kind of emotionally attractive and for an investment case, but it's just very well connected. We can see here from see my mouse, the central area of Avenida de Liberdade, where all the prime shopping and destinations, all the restaurants and some of the offices as well. There's that kind of purple strip down the middle. Grassa to the right here, that's within a 10-minute walk down to the front, or 15 minutes back into the centre of the city. It's an established residential neighbourhood with very little new build property into it. So this is a property that really stands out and is excellent value. Now Porto, they've got 2 different properties here. The first, I'm going to say, is more investment led. The second is more of a visa play. So this one is one we bought about a month and a half ago. The property is up the top of the screen. There you see Matosinhos, which is just by the port area. We're right in one of the nicest residential areas right there. So there's some of the major employers of Porto over there, and obviously the major kind of tourism arm as well, because this is where the ferries and so forth come into, and more core to the centre of town, where the other property is for the visa side of things. That's an historic centre there. So as I said, Porto, biggest FDI in the country, Forbes most investable city of 2020 globally, and the number of jobs being created by foreign investors grew more 300% in Porto and generally northern Portugal over the last 6 years or so. So a lot of money flooding in. It's actually just accelerating, and it's still manufacturing hub of the trade hub of Portugal. A lot for it economically. This is our property for investment. It's 66 units in total. We've taken circa 20 from the developer. The rest of the developer actually have sold this year already to local market, and actually a lot of them to their friends and family. So the rest of the building is all sold. We've taken 20 units. We've taken 1 and 2 beds only because we believe these are the most liquid and easiest to rent. You can see the price on the side there from 240 up to about 360. Again, we can borrow about 60–70% on these, and rental yields of about 5.5%. So, you know, obviously you can find stronger, not stronger, higher yields in kind of further areas further out from city centres, maybe up to 6.5–7%. But this is what I'd say is the most rentable, most desirable area, basically. So 5.5 is real. You know, that's what you want from an investment. And what we've got for our modelling and business planning here is just under 50% basically of capital growth expectation over the next 10 years. So what that means for an investment, if you're going to buy cash, you'd be making with rental income and the capital growth every 10 years, you make almost 70% basically return on your money. Now, if you're going to take a mortgage of maybe 65%, you'd be making 141% on the invested capital, because you still get all that capital growth and you get some rental income over time. So for pure investment advice, we'd say to take a mortgage on it, and the returns get exponentially expanded. And this is a local area for Matosinhos. We can see on the right there that we sit probably 4 minutes away from one of the most popular beaches in Porto, Surf Beach, if you like that kind of thing. But most importantly, it's going to be very easy to rent. The prices are going up there faster than anywhere else in the market. And it's got a lot of major decent job centres around it, and obviously, you know, it's quite an attractive building in itself. Basically, it's kept some of the original features of the original factory it was site it was based on. You see that kind of chimney stack there, but everything else is new build, basically large apartments, and you know, super easy to rent. Now, the last one before we finish and go to questions is Baixo Gardens. Now, this is in the prime heart of Porto. This is eligible for the Euro 350,000 level of in Portugal, and it's a refurb building of studios and 1 beds right in the heart of the city, basically. So super high quality finishes. They've given a guarantee on the rent for the first year. You've got freehold ownership, as you will with anything in Portugal. And you know, it's very livable. It's got a nice big landscape garden out the back. It's got decent space, and in its positioning, it's right opposite one of the major universities. So a very well-connected, decent area of town. The prices range previously from around about 350 up to about 420 for the headline values of properties. So that's kind of what you've got to equate in, and maybe about 4 or 5% of acquisition costs for the government taxes for buying a property, that kind of thing. In terms of walking distance, about 11 minutes to the central train station in Porto. That means you can get to Lisbon in about 2.5 hours. It's also then got it's just pretty much the hotel district as well. So some of the kind of more iconic prime hotels like the Intercontinental and so forth. These are all kind of within short walking distance. And then we can see it then as well. It's well connected in terms of transport. Got the tube network will go up to the airport as well. And obviously now, as I said before, we've got direct flights now to about 160 destinations worldwide, including Middle East and including out to Asia. So it's a dynamic market there. And last then, just to give a kind of a map view of where we are and compared to old downtown and, you know, major shopping streets. There's the stadium's got 15 minutes to drive to get out to the airport if you want. Big universities and big employers like the banks, the consultancy firms and so forth, mostly within walking distance. So an interesting prospect. So that's all for me in terms of all the talking, which is quite a lot. And yeah, please do come fire in any questions you might have.
Jeremy, thank you very much for that. Again, really, really useful. I'm still very pleased to see, as you know, I'm an ex-banker, to see a 10-year fixed rate in euros that's available. As a Canadian, I often look at my American cousins with their 30-year long bond and being able to borrow for 30 years at a fixed rate with great jealousy, frankly. But to be able to borrow in euros for 10 years at those rates is incredible. And I think that would, have it definitely has a massive impact on the real returns that someone can get with a leveraged purchase over the number of years. One thing I just wanted to ask you, because, and again, I appreciate that I'm a real estate broker. Normally what we do is we sell property, we sell and rent property. What you do in your process is very different. So if I, whether it's myself or someone else would come to see you, although the last little bit you talked about some very specific opportunities, which in themselves are very interesting. Can you just give me just a quick rundown of your process? Because you're not a broker and you don't just sell property, how do you actually go through the process with someone like myself or any of the callers that are online?
Yeah, no, it's worthwhile saying, because it's relatively unique in the property world, really. I mean, normally you either have the developer or you've got the agent selling for the developers, and we're effectively a finance company, but we just specialize in property. And like anyone basically going to buy their own property, I mean, the best way to do it if you're going to invest in it is just research and just understanding the market in terms of its core fundamentals. Probably the three things, there's lots of things we look at in terms of safety, mostly all, but it's supply and demand and balance, what kind of major regeneration is going on in an area, and what kind of infrastructure is being there. So that research dictates what a safe and a profitable, decent investment will look like over the next few years. Now, we can't then just take that to put it on the supermarket shelf and say, hey, that's great, go and buy it, because a good investment is only good in relation to someone individually and their personal circumstances. Your age dictates, whether you're likely to take a mortgage, the amount, well, your budget, of course, dictates what kind of market would be more sensible. But, how do you want to make money is important. So, we're an advisory firm. So, we've got our investment team who are kind of on the ground speaking to the developers and negotiating good deals with them. But, most of our staff on the ground here in the Middle East and in Asia and Africa and Europe and so forth, we're property experts in relation to individuals. I'm a financial advisor basically, but just dealing with properties. So, it's knowing everything about the tax, it's knowing about timings and positions. And someone tells me, oh, but I'm planning to do this in 5 years. We say, well, hold your horses, you shouldn't buy here then. Actually, what you should be doing is maybe migrating your entire interest to a different country. So us being a global company allow us to tell you what the difference is between Manchester and Melbourne and Berlin and Birmingham and places like that. So, and because it's all scientific, it's nothing to do with liking a city or as much as Portugal was very livable and attractive and so forth. It's about moving people, why it's safe, why it makes sense, and why that economy should do well over the next 10 years. So you should buy at a sensible price. Just believe in the market, let it do its thing, and buy something which is always going to be rented, because that means you've got an appreciating asset. It's going to do well for you. But yeah, this is us coming from a, this is my forte. It's about making money through property. Now, the Golden Visa side of things is kind of an added bonus, I would say. So I give objective advice on that and what I think it's right, and I think some of them are better value than others. But this is it. Some people's end goal is more priority towards getting that visa for themselves and their family than actually necessarily a full 10, 15, 20-year return. So actually it's worth bearing in mind when you buy into things. So the other thing, actually, I just thought of while saying that, which is probably one of the major reasons why people now, because we've seen a big uptick in the visa side of interest in the last 6 months, clearly. But it's not just about your immediate worries about COVID and maybe you should secure something. Increasingly around Europe, where the best education and best universities are, they're extraordinarily more expensive for non-EU residents, basically. So actually getting into the visa systems means that you can translate a 10,000 euro education into a 45,000 euro education if you don't have citizenship. So it's something which, I mean, to be honest, that kind of occurred to me in the last year, basically. I wasn't really thinking that way, but actually that's the truth. I took it for granted when I lived there, but, people outside of that, you want to send your kids to, Dublin or London or Lisbon or one of these ones. It's it can be financially make a lot of sense to get yourself into EU citizenship.
I think that's a great point. As a father of 3 daughters, and 2 of them, both my 2 oldest, in university, frankly, as I mentioned before, as a Canadian, really Canada was the only option for us, because that's the passport that I carry, and it's been a great option, and it's a great country for education. But Europe, I was priced out of Europe for the kids. However, had we had a European passport, then things could have been very different. So that's an excellent point. Just one last little bit on the visas. Appreciate again your background as a financial planner. Visas, or the visa program, I should say. It's as with any investment, looking at a visa situation, it's really down to the nitty-gritty details, which can be quite important to get that right. So I'm going to assume, but I'll just ask you, do you have people on the team that are experts in this that can really guide someone through these issues, or how do you normally work through that?
In terms of what, the kind of the
just in regards for visa, more on the visa side, so that people are making sure that they're making the right decision and have the right details as far as what qualifies and what might not qualify.
Yeah, no, absolutely. I mean, it's a bit like going to purchase a property as well. You don't just kind of apply online, you have to do it via a lawyer, so there's some kind of cost associated with the process as well. So we've got a kind of educational pack we can send out to people with the kind of basic information on it to kind of know as to what documents you need and what the processes are. But it's not something you have to do on your own. So if you're buying property through us, you've got the advice on our side, but we've got direct access to the lawyers basically who'll be processing it for you. So they're the ones to kind of say exactly what it is. And actually, it's worthwhile pointing out that the 350 scheme I mentioned, the Baixo Gardens in the centre of Porto, the developer for that, because they're pre-vetted, they have to go through, it's not just any property, you have to be qualified for the visa program. And so they've gone through all that, and they've kind of had everything registered for it, is ready. But because they're so kind of confident they're doing that, and they've realized that there are visa schemes around Europe, around the world, which don't have the best track record of coming to fruition, that actually they're guaranteeing a buyback basically if the golden visa wasn't given on that scheme. And that's not in 5 years when they're kind of going for the passport. That's when you're going to get issued your visa in the next 3 months. So they know they've sorted it out correctly. So if they're saying if there's anything wrong with the property itself, then that does not agreed, then you don't have to buy it. So knowing that kind of thing, comfort. Yeah.
That provides a huge amount of comfort. So I appreciate that. Let me see if I can do this correctly. I'm going to put up a very quick poll onto the screen, just for everyone to have a quick look at before we wrap up. So what I've asked the question is, if you were to invest in Portugal, would it be due to A, looking purely from an investment standpoint, or visa potential? And again, I mean, it's a really simple option between the two, and I'm sure there are more than binary options for this question, but just putting it down to this binary question for now. And I'll just let this run for a few seconds. I'm seeing the votes coming in. Very interesting to see where the split is, and I'll bring that up in just a few seconds. Let me let it run for a bit to see where people are coming through at. Okay, just in the interest of time, apologies, I'm going to close this off. Okay.
I'd say for those people who are on the call as well, I mean, like we were saying before, because it's such a personal, each individual's plans are different. I'd say, take advantage, because, Jeffrey and I and, the team there, we're kind of available to help and support, just give advice for this. So, I mean, it's a modern world. We can easily jump on a Zoom call. So if you want to learn a little bit more, or just ask some questions about how does this compare to other markets, because some people might just want to get into this in the cheapest possible way they can, like, fine, but give you objective advice on that. But yeah, I mean, I think by all means, please just email us afterwards, just say let's have a chat, because I think it's a lot more comes out of a conversation like that.
I totally agree. Jeremy, I want to thank you again for your time, and for those that joined us today, thank you very, very much. Afterwards, we'll be sending out a recording of this, so if you either came in late or needed to leave early, of course you'd still be on now, But I will send that out so everyone can have access to a recording. If you want to share that with your friends, we would love you to do so. And as Jeremy just said, we're happy to reach out and have a discussion with anybody about their investment needs and the financial planning side as well with Jeremy. If there's anything you need from that side, please let us know. We'll be happy to work with you. Jeremy, thank you again for your time and for your expertise. I once again have learned 2 or 3 new things today, which I didn't know. I certainly didn't know at all about the long-term financing in euros. So that's, I mean, you saw me scribbling down on my paper. I might be giving you a call myself very soon. So thank you for that. Appreciate it.
Yeah, no worries.
Thanks
all right,
again.
thanks all.
Take care,
I hope we get to speak to somebody soon.
All right. Take care now.
Thanks.